One jailed man created the system that still runs your money today. In the early 1700s, a Scottish gambler named John Law found himself in prison for dueling. With his fortune dwindling, he turned to studying finance and the law, eventually convincing France, his king, that it was possible to make paper money the standard currency instead of gold. After all, paper money could be easily produced, couldn't be counterfeited, and would make transactions much more convenient. The king agreed, and for a while, this worked out very well for John Law and his fellow countrymen. Merchants were able to buy and sell goods across the entire nation with ease, and the French economy boomed. People even started investing in shares of the National Bank, which printed the paper money. And because of the convenience of paper money, people started taking loans and issuing credit to one another, which further boosted the economy. It seemed like John Law had created the perfect system. Except it turned out that there was a fatal flaw in his design. See, when you base an economy on paper money, it's very easy to overprint. And when there's more money in circulation than is backed by gold, you get inflation. To make matters worse, people began to suspect that the government wasn't actually backing up their paper money with any gold at all. So they began hoarding gold coins, refusing to accept the paper money. This caused the French economy to crash, wiping out much of the wealth that John Law had created. But before that happened, he fled to England and made a fortune in the process. You see, despite its flaws, John Law's idea of credit became the backbone of modern banking and is still used today. And in a way, money still follows John Law's gamble from prison cell to Wall Street. So if you want to learn how modern banking works,